Hello traders, welcome back to the Forex Geek where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to explore how you as a student can start trading effectively. Even with limited time and resources, you would learn clear and practical steps that would guide you through the basics, how you understand key trading concepts, and accept and apply a simple strategy designed specifically for your situation. So stay tuned until the end to discover how you can build your financial future through trading while managing your studies effectively. You need to understand trading basics for students. To start trading as a student, the first step is to understand what trading really means. Trading involves buying and selling of financial assets like stocks, the forex, the crypto with the goal of making a profit. So with forex, you can trade your stocks, you can trade futures, you can trade forex, you can trade the crypto index, bond, and so on and so forth. You don't need to be an expert right away, but you need to grasp the basic concepts and how the market works. You will need to know some key terms like market orders, limit orders. A market order is when you buy or sell an asset immediately at the current price. Let's assume I'd want to place a trade at this particular area. This is This is what is called as a market order. If you are using your trading view, you just need to press your buy at this particular place when you are logged in with your broker, or you just break your long position to place it at that particular area, then it would ask you to automatically buy. When you buy, you can adjust your stop loss at this area and your take profits at this area. This is basically what it's all about. You don't really need to be an expert right away, but you must just grab little basic knowledge. Now for a limit order lets you to set a price at which you want price to buy or sell when the trade happens to get to that area, knowing that it will help you control when the trade happens. Now let's assume I'm expecting price gets to this region and I expect it to go up from here. What do I do? All I need to do is to come here with my order. I just need to come here at that particular area I'm expecting price to. I just need to right click, then I set my buy limit at that area. I will need to set my buy limit at that area. Now when you right click, it will tell you to adjust where you want your price to be, your stop loss to be, and where you don't want your take profit to be. Now the moment price gets to that area, price will automatically trigger you and take you to, and the trade, whatever the outcome is, it depends on what your analysis or what the market decides to do. Another important idea is called risk management. Now this means deciding in advance how much money you are prepared to lose on a single trade. For a student, keeping your risk low is very essential. Losing money you will need for your tuition or living expenses can cause real problems. So think of risk management as your safety net. There are some simple tools like the moving average, support and resistance lines that are useful for beginners. You can use your moving average to smoothen out price movements to show overall direction. You can also make use of your support and resistance levels. There are price points where market tends to stop and reverse at that area. These tools simply help you to identify good entries and exit points. You can look at this area. This is a good area of resistance, a previous resistance point. This was a previous support point. These are areas that you can be looking at. We expect price to react from somewhere at this area. If price gets down to this area, we still expect price to react from this area. Now, before using real money, you need to try a demo account first. The demo account will let you practice trading with virtual money in a real market environment without any financial risks. This is a safe way to learn from your mistake and build confidence. And let's look at a step-by-step trading strategy as a student that you can make use of. Trading as a student requires discipline, planning, and a strategy suitable to your lifestyle and resource. Now let's look at a detailed step-by-step guide to help you begin trading effectively without overwhelming your schedule or finances. The first step would be to choose the right trading platform. Now you should begin by selecting a regulated broker that offers low transaction fees and free demo accounts so that you can practice without risking real money. Confirm this platform provides both desktop and mobile version with a with an intuitive interface for placing market and limit order. You have to review any educational materials such as tutorials or webinars to accelerate your learning curve. You have to check the minimum deposit required and available payment methods to ensure they fit your budget and local regulation. Spend time exploring them. You can explore their chart tools, drawing futures and other types before trading live. So you need to make your research before you decide to choose the right trading platform. Now the second step would be time management for trading and studies. As a student, your primary commitment is to your studies. Remember this. So you must schedule trading around class assignment. You must schedule your trading around class assignments and rest. You need to create a weekly calendar that blocks specific time slots for market analysis, orders replacement and review. Limit each sections to 30 to 45 minutes to maintain focus and avoid burnout. Use alarm calendar reminder to start and end your sessions punctually. Over time, you will discover that most productive trading window and refine your routine. Meaning with time, after doing your studies, you will discover your most productive trading window. The third step would be managing your trading capital, which involves protecting your account from large drawdowns which is necessary and essential. You decide on a fixed percentage of your balance to risk per trade. I would commonly advise you to risk at least 1 or 2% of your trading capital. So you have to calculate your risk amount before entering a trade. Then you determine the position size based on the distance between entry and stop loss. Always reserve enough funds for essential living expenses and unforeseen costs. By capping your risks, you ensure that a series of losses won't derail your progress. In example, a 1% risk on a $500 account equals $5 per trade. So if your stop loss sits 25 pips away, you just need to adjust your lot size so that 25 pips moves equal to a $5 loss. This is basically what it means. Now, the fourth step would be choosing the right market. You have to concentrate on one or two markets to prevent information overload. The Forex pair often offers 24-hour trading and high liquidity, often suiting small capital. Stocks may require higher deposits and trade during fixed hours. Cryptocurrency run around the clock but can show extreme volatility. So you have to choose the market that matches your time availability, capital constraints, and risk tolerance. You have to master its behavior before exploring orders. Now dis chart comprises of forex continuous sections with moderate swings, stocks fixed hours with steady moves, and crypto erratic spikes. You have to select the market that best suits you. This is the forex market. You can see how the forex market is giving you a lot of good swings. If you go into the stocks market, let's check stocks market, you notice that stocks has a lot of quick moves up and down and is extremely volatile. As you can see, it has a lot of movement. Same with crypto. If we check our crypto market, you see crypto has a lot of move up and down at the same time and is highly volatile. This is basically what you need to compare before deciding to choose the market you would want to capitalize on. The fifth step will be using simple trading strategies. You can use simple trading strategies such as using your 20 period moving average with support and resistance. Using your simple moving average, you just need to add your simple moving average. If you add your simple moving average, you will then need your support and resistance for backup. Using your 20 period moving average, let's make this easier for us to understand. First of all you need to do is to identify the trend. If you can identify the trend using your 20 period moving average, if price is above the moving average, it means that you should be looking for buying opportunity. And as you can see at this area, price was above the moving average, meaning that we should just be looking for buying opportunity at this area in the market. Now when price is below the moving average, it means that you should be looking for only selling opportunities in the market. This area of the market, you can see price was trading below the moving average. We should be looking for only selling opportunities at this area. You can also mark out key support and resistance areas in the market, because these are the areas where price tends to stop and reverse from. If you mark out key resistance and support areas in this market, you see these are areas where we expect price to react from. These are the areas we expect price to react from in the market. You have to enter trades when price pulls back to your moving average near these levels and show signs of bouncing off support or resistance. This is how you enter the market. After marking out our support and resistance in this area is also, this is a resistance area. Let's mark out our support region. This is our support region at this area. You can see these are swing highs and lows in the market. As you can see, when price got to this our previous resistance level, price broke this structure. Let me remove this. When price came back to this our resistance level, this line here, you can see price dipped in and reversed from that area. You just need to watch the price, how price reacts at this your area. You can see price still came to this support region before it reverses. So it shows that support and resistance level are highly strong zones that price tend to respect. All you need to do is to set a stop loss few pips below the support in terms of a buy trade. If you are to buy at this area, if I'm taking my trade at the resistance area, when price comes to the resistance area, you just need to set your stop loss few pips below your support region. You just need to set it few pips below your support region, and you put your take profit to at least 1:2 risk to reward take profit. All you need to do is to maintain. Once price gets to your resistance, price is already trading above your moving average, which signifies that we are in an uptrend. And when price comes to respect this our resistance level, you know that you enter the trade at when price gets to the resistance level, you set your stop loss just below your swing low region. You have to determine where to take your take profit by aiming for a 1:2, a minimum of 1:2 or 1:3. You also have to avoid trading during major news events as volatility can spike unpredictably. Now, the sixth step would be to journal your trades. You have to keep a detailed journal of each of your trades. This journal will basically help you to record key data such as your dates, the days when you took the trades, your position size, this is your lot sizes, your take profits, your risk to reward, this is your profits, this is the growth, how many percent trade. Then this is basically what the trading journal helps you to detail. You can also go back and check the trades that you took. These are the trades. You can go back and always check the trades that you took to see how you can improve your strategy or where you made mistakes in your trading setup. That's why trading journal helps you to review your winning patterns and your recurring mistake. This discipline accelerates your learning curve and helps you to re-identify, to refine your strategy. Your development as a trader depends on ongoing education and practice. So before you come into the live market, always remember to try your strategy on a demo account to test new ideas without financial risks. You have to also participate in online forum or study groups to exchange insights and ask questions. You have to regularly backtest your strategy to adjust your strategy and integrate lessons to your journal. This structured will help you build confidence and competence over time. Alright traders, we have come to the end of this video. We expect you to engage with us in the comments below. We want to hear about your experiences. And if you found this video helpful, do not forget to like, share, and subscribe. Turn on your notification bell so that you wouldn't miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.